Well, for the first time in their 152-year history, the CEO just acquired $400 million worth of gold for that fund. And in talking to Bloomberg about the purchase, he mentioned that gold just seems to make sense right now.
This podcast is brought to you by safestgold.com. Call now for your free gold kit at 1-800-510-9594. An $80 value, this kit and DVD will show you everything you need to know about gold and how to use gold in your investment portfolio. Call 1-800-510-9594.
It's time for the Gold Show. Jonathan Rose, CEO, President of the Capital Gold Group, and Precious Metals Investment Strategist is with us today. Jonathan, as always, good to talk with you.
It's always a pleasure to be here and help educate our listeners on the importance of having a balanced portfolio that does include gold. There's a lot of news out there on the importance of adding gold to your portfolio. People like Gary Dugan, who's the Chief Investment Officer of the U.S. banks, says there's a remarkable change in sentiment that people want a portable asset that they know is not going anywhere because, let's face it, you don't know if your money is safer in the bank these days or in the back of your sock drawer. So on today's show, we're going to be explaining the benefits of owning tangible gold to your portfolio and how that's also going to be protecting you against the shrinkage of the U.S. dollar.
And, of course, we're going to, later in the program, mention listeners' questions. We're going to read some of those and give you a chance to do our Ask Mr. Rose feature. Recently, we've been talking about how bad interest rates are on those CDs. I went and checked. You're right. You generally can have a CD these days and just get a few dollars a quarter. It's just embarrassing, isn't it?
It is embarrassing. I don't know why people would want to put their money in the CDs right now, especially when the FDIC are talking about being insolvent possibly by the end of this year. And the FDIC are who insures these banks when you have over $100,000 in there. And I was reading the Wall Street Journal just the other day, and a 6-month CD is paying under 1%, which is a joke. If you look at the rate of inflation, which according to our government's at 4%, and the value at which rate the dollar is shrinking since April, it's 9%. Well, basically, you have to figure if you're not making better than 12% annually, guess what? You're losing money. And when Warren Buffett clearly stated that the days of double-digit returns in the stock market are over, he's absolutely correct. So what people are doing right now is they're being prudent and making sure that the money that they have got, they're trying to hold on to it. And in fact, someone like Mr. Buffett, who just recently purchased 2 of the largest gold manufacturing companies in America, well, the reason why he's done that is because that's how he diversifies his holdings, by putting it into tangible assets such as gold. And not only that, he also sees long-term value and growth in gold, just like we do, just like other companies such as Merrill Lynch, who are seeing gold rising to $1,500 an ounce in the next couple of years. And I actually expect gold to be anywhere between $3,000 to $4,000 an ounce in the next 4 to 5 years.
Well, what you're talking about is that the big guys are doing these asset reallocations. They're adjusting to where the market is. And the problem is we just sit with our little CDs thinking we don't have the opportunity to do this. But you're here today to say that we, just like Buffett, we can make changes, we can move things around. And one of those things to look at are the precious metals sector.
Absolutely. In fact, if you haven't purchased gold now, it's absolutely not too late. Metals are very desirable. If you're looking at other big companies out there, such as Northwestern Mutual, they're the 3rd largest life insurance company in America. Well, for the first time in their 152-year history, the CEO just acquired $400 million worth of gold for that fund. And in talking to Bloomberg about the purchase, he mentioned that gold just seems to make sense right now. During the depression, people tend towards to invest in gold because it's a safe haven, it's a flight to safety and security. And let's face it, the government isn't going to be backing up your dollars for you, but you can definitely do it yourself by purchasing gold coins, gold bars, and even the older gold coins minted prior to 1933 that are considered non-confiscatable and non-reportable. And in the Capital Gold Group blog that we report, to date, 53 bank failures have occurred in 2009 so far, which is the most in 1 year since 1933. So as people are noticing that banks are collapsing, the dollar's shrinking, unemployment's on the rise, stimulus money that's being spent is creating inflation, it really does make sense to have a balanced portfolio that does include gold and silver as a part of an asset allocation strategy.
And Jonathan, people used to think, well, the banks are safe. We've been reporting stories on people who had their money in the banks, thought that they were insured, were told by the bank employees, oh, you can have all these different accounts and it adds up. Turns out they had more than the $100,000, and they lost out, didn't they?
Absolutely. The FDIC, which, you see that sticker on the teller window every time you go to the bank, who protects the monies in the bank, they're talking about becoming insolvent. And as I mentioned to people, Gary Dugan, the chief investment officer of U.S. banks, he repeatedly says there's a remarkable change in sentiment that people want a portable asset that they know that's not going anywhere. He's talking about gold. And if you look throughout history, look throughout time, there's reasons why members of the royal family, heads of state, they've been using gold to preserve their wealth for centuries. It's no secret. And I'm not saying put everything into gold. That would not make sense. But what does make sense, and especially if you're working with a financial planner, they should be recommending at least 5 to 30% of what you have in paper to be moved sideways into precious metals. In fact, we have what's called the Gold Affiliate Program here at Capital Gold Group. We've been doing this with broker-dealers and financial advisors across the states now for the past 4 to 5 years, and they've been approaching us to purchase gold so that they can then sell this gold to their clients to balance out their portfolios. Well, you don't even have to go through a financial advisor and pay them a commission for that. You can actually get it directly from the source, and if you're new to gold, that's absolutely fine. We'll help educate you and start you off slowly so you feel comfortable. What I love about gold, it's independent of all market cycles. You don't have to worry about the CEO, the board of directors. It's a very transparent process. It's easy to purchase gold. It's easy to sell it. And as soon as you get it in your hand, you realize, you look at this shiny yellow object, it's got a beautiful luster to it, and you look at it and you realize, wow, this is worth something. This is real money. And many cultures around the world only consider gold as real money, as their currencies are afloat with fluctuations. And the only real wealth is gold, regardless of the value of a currency.
And speaking of that poor old dollar that's lost so much, you were telling me not long ago that some stores in New York City were starting to accept other currency.
Absolutely. It's been noted that in New York, some department stores are even, taking euros now as payment for shopping. In fact, one supermodel recently who actually was doing a work contract, I forget her name, I think it was Giselle. Well, when it came to be paid, she didn't want to get paid in dollars. She wanted to get paid in euros because the currency is much stronger. And in fact, I've just recently come back from Europe myself, and I didn't have time to change up all my money. And I was in Spain, and I went to a bank over there and I changed up some of my dollars, and I thought the bank teller made a mistake. But then when I sat down and got my calculator out, I realized he hadn't made a mistake. It's just that the dollar was that low. And in fact, if I recollect, I think $1 was worth 63 cents, like 63 euros. So, I kind of came out of the bank scratching my head a little bit, and then I actually realized, we talk about it all the time, the slippage of the US dollar, but when you travel overseas, you really do notice it. You feel it in your pocket.
And it's one of those things that's slow and gradual. It seems like it's a bit more. Weren't you saying that just in the 3-month period, the dollar has now slipped some 9%?
Absolutely, and it's going to continue to fall as other experts predict. And because of the slippage of the US dollar, other countries out there, such as China and Russia, who have a lot of